他是闯荡华尔街25年的老将，他是著名的一书《股市周期》的作者。下面我们就来听一下 Jeffrey Hirsch 对于2015年的股票走势有着什么样的看法呢？ Hi Jeff, good to have you with us.
Thanks for having me.
So based on your theory about the stock market cycles, do you think 2015 will still be a bullish year?
I think it's got a lot of bullish implications, and the forecast I made in December was for about 19,000 on the Dow in the first half. However, I don't think it's going to be as strong as a lot of the third years of president cycles are. It's the second time that Obama's had a third year, a pre-election year. So there's some factors that I think are making it a little bit less bullish. So yes, I think we'll end positive, but not as powerful as some of the other pre-election years.
Okay, thank you. And so since now the stock markets are at all-time high, some investors, they're moving into the European market. What kind of trading strategies do you have for short-term and long-term investors?
Right now, we're beginning to tighten up our stops in some of our positions. March, April, May is usually a seasonal time when U.S. stocks tend to peak out and start to roll over. So short term, we like oil. We're going long oil. The precious metals is not something we're very interested in right now. I'm not currently shorting it, but there is a seasonal short and sort of a technical setup there. But we're starting to remove some leverage and be careful about getting long and looking for some defensive positions. So short term, I think you can just sort of trim losing or underperforming positions and sort of tighten up stops on some of your winners.
Well, thank you. And since I noticed this very interesting fact. The stock market was down on January this year and up on February. It's the exactly same with what happened in 2014. Since today is the first trading day of March, so what do you think about March? Will March be a good month or bad month for stock market?
I think overall it will be a good month, but within the month you have to realize that March has a tendency to be very weak at the end and sometimes dramatically down after triple witching, and towards the end of the month you have the sort of first quarter portfolio restructuring that the managers do. But I took a look back at the S&P since 1930 with all the down Januaries that were followed by an up February. There was 13 prior ones. The years of those years averaged minus 2.5% for the S&P. There was 6 years that were up and 7 that were down. So though this rally in February is very impressive, and I think we've got some further upside here, it doesn't necessarily mean that it's going to be a fantastic year. So March, you got to watch out. The old Shakespeare, beware the eyes of March for Caesar. It's true for the stock market at all. It tends to be a good time, the middle of March, to sort of look to either cut some holdings or take some profits or just be a little defensive.
So at the Federal Reserve chairwoman, Yellen's testimony at the Capitol Hill, she mentioned that the Fed want to see more inflation rate moving towards a target annual 2%. Right. When do you think the Fed will raise the rates, and what investors can do about that?
Well, the rate increases being telegraphed and talked about, I think it's getting pushed further out. It used to be, mid 2015 was when we might get that first quarter point hike. It may actually be later in the year, and maybe not even until next year, with the energy prices down, taking the inflation out. I think what it's going to do is, it'll take some of the air out of the U.S. market. So, however, all of the quantitative easing that is happening in Europe and in the Far East. The U.S. market being one of the strongest stock markets right now and strongest economy, I have a feeling some of that overseas money might come back into the U.S. market, chase performance, if you will. So it's gonna be the first time in a long time where we've got the Fed being active, on the tightening side, and I think that's gonna soften the market. And it might even be the beginning of the next cyclical bear market sometime in the next year or two when they really it could even happen sooner. So I think it'll take the air out of the market.
Well, last question I want to ask you about Apple. Since Apple's stock price is at all-time high, the Apple Watch is coming out this year. They also wanted to get into the car industry. I read an article on Barron's. They predict the Apple stock price will rise to 160 over the next year. What do you think about that?
I like Apple. I use Apple. I mean, I've always been a PC, Excel-oriented individual with all the tables and charts that we do. But when it comes to the smartphones and They've got a real handle on that, and I think it's a great company. I personally like to invest in Apple by going into the NASDAQ 100, the QQQs. That way I get a little bit of diversity with the other tech market. So we're still long that. I think it's got some upside there. Getting to 160 exactly or not is not a call I make on that particular stock, but we're in it through the QQQs. I think there's more upside there. But again, as I said before, we're starting to get a little bit cautious here. I'm not going to go chasing that right now. I don't love chasing stocks that are way up. I don't chase momentum that way. I look for something that's before it pops a little bit, is more undervalued, a little bit under the radar. But Apple's a great stock. I wouldn't sell it. I'm just not sure I'd be dumping a whole lot of new money into it right now.
Okay. Well, thank you. Thank you so much for joining us. Hopefully we can see you in China soon.
I'm ready to come. I love it. I loved Hong Kong. Thank you very much.
Thank you.